the rescue of AIG had a, quote, poisonous effect on the financial system. And that is essentially the gist of a 300-page plus report out from the panel overseeing the financial rescue packages, overall critical of what the Fed and the Treasury did with AIG. Elizabeth Warren is the head of that panel, and she joins us now. Elizabeth, great to have you back with us. And, I was reading the executive summary, certainly quite critical of what the Fed, what Geithner, what Bernanke did during that time. But before we get to that, though, you've expressed in this report doubts that AIG will pay back the full amount of money that they got from taxpayers. Bernanke even yesterday said, look, they will pay back. So what's the difference here?
Well, the difference is, and I want to point out, the CEO of AIG testified in front of our panel. You will get paid back with interest. The Treasury Department backed up that we will get paid back. Remember, on the other hand, the Congressional Budget Office that cannot take account of projections of future income that are not certain says we could end up losing $36 billion. Really, the bottom line is we are in economic partnership with AIG. If their business model works, if they get out there and sell a lot of insurance policies and everything goes gangbusters, we will get paid back. But if they don't, we won't. And so it's a point of risk, and it is not known yet whether we're going to get our money.
No, but you even have said in the past, Elizabeth, right, that you actually think maybe even some of the units at AIG could go bankrupt.
We certainly raise that possibility. This is part of the whole question about AIG's business model and whether or not there are pieces that may still have to be broken off that are not valuable. Now, I should say in the other direction. We know that there are valuable pieces. Unfortunately, one of them was not sold recently, but the whole notion of an IPO, of spinning off these other assets, this is still a big and complicated business, a lot of moving parts. Right. And still a lot of risk for the American taxpayer.
Right. You say that you think it's basically highly unlikely that they would go that route. I mean, it's a difficult market now.
Yes.
Elizabeth, just one last thing on the on the criticisms with the Fed and Treasury. I mean, they say that you're not putting this in the right context. Remember, back in September, things were happening so quickly. If you would have paid all of the counterparties at a discount, that would have caused even more turmoil in the financial markets. Why don't you buy that, though?
So let me make 2 points. The first one is we say repeatedly in the report, what the Fed did pulled us back from the brink of a Great Depression, and they should receive great credit for that. But the point we make is that, look, they argue that they were down to just a few hours and that they had only a binary choice, either bail out in full 100 cents on the dollar, no other options, or let the markets go into complete collapse and chaos.
Right.
What we argue is that when you go back through the tens of thousands of documents that we went through and all the testimony, there were a lot of signs that AIG had a problem. The CEO is calling in the summer, the Fed saying, I've got a problem. Lehman weakened. AIG has got a terrible problem, and the Fed is only focused on Lehman, which they ultimately let collapse. So the timing pressure is in part of the Fed's own making. It failed to consider alternatives, and that's really the problem we talk about here.
We've got to get going, but thanks so much for joining us, Elizabeth Warren.